What's up, guys? I remain your boy, Toby O. Nelson. There's something I want to say quickly. I have actually started working on the book I said I'm going to write that contains all my strategy, everything that I do before I enter a trade or is a trade. But that is just one thing that I want you to know now. The second thing is that I'm actually going to show you how to write a trend. First of all, how to identify a trend and how to write a trend. Basically, I will be focusing on three major indicators, three major powerful indicators that you should focus on when you are trying to identify a trend and write a trend. So, without much story, I want us to go to my computer screen now and dive into it. However, before we go to my computer screen, there is something you need to do real quick. I want you to subscribe to this channel right now and like the video. You need to subscribe so that you get more videos like this and you change your trading game. So let's go to my computer screen now. Now that we are on my computer screen, let me show you uh, those three indicators that you can use to write a trend. But first of all, you need to understand how to identify a trend. So after you've done that, then you can start applying uh, one of these indicators to write a trend. Let me show you how to identify a trend. Let me show you how to identify a trend. We have uptrend, we have downtrend, we have sideways, which is also known as consolidation. But let's look at how this actually looks like. An uptrend has an higher high, higher low, higher high, higher low, higher high, higher low. Okay, this is how an uptrend looks like. Yeah. Now, how do you write this kind of trend when you see it? Now, the first thing is when you have this higher high and higher low, and then you have the market or the price of the market going up again. What you just have to do is don't jump into the trade like this when the market is already going. Don't jump into the trade. Wait for the market to or the price to retraces back. Okay, retraces back, and most of the time it will retraces and make this resistance level a support zone. You're going to make it a support zone. This is what you are going to see. Where's my okay? Yeah, here we go. You're going to make it a support zone like this. You are going to have something like this. Yeah, you are going to have something like this. Now, this area is a perfect way to enter the market. Okay, and one of the first indicator you will use in this case to confirm or that you can use as another confluence to take your trade, which is one of the first or the first of those three indicators that we'll talk about is Fibonacci retracement. When you have something like this, always try to make sure that you take your Fibonacci and draw it from this level to this part. Okay. So the idea is these are the two gold zone, 51 and 61 gold zone. So which is 0.5 and 0.6. So this is the gold zone. As you can see, the market will come and test. When you see that the market tests either this part or this part of the market, this line, either this first one or this one, either 0.5 golden zone or 0.6 golden zone, then that is another confluence to show that the market is going to actually bounce up. Now, the question is this: how do we know that the market is going to respect this golden zone? The reason is because most traders enter from this point, enter trade from this point. Many traders use Fibonacci retracement and they enter from the gold zones. So as the other traders are doing, even big traders, as they are using this Fibonacci retracement and they are entering here, it's going to affect the market. So you too can take part and take advantage of that. Take advantage of the fact that a lot of traders are using this. So this is the first strategy. This is the first indicator to use if you are trading if you want to write a trend. The same thing is applicable when the market is in a downtrend. Let's look at downtrend. Um, okay, downtrend is that. Okay, so let me just use this. Yeah, let me just use this. So now the same idea. If you look at it, most of the time, this support zone, the market always come back to test it. So you have to always look out for that. Look at this. So you always need to always look out for that. You always need to always, so you wait until the market come back, retraces, and make that support level as a resistance, then you trade. And then you can also use your Fibonacci retracement as another confluence to check if the market is in your favor. In this case, as you can see, the market is around the golden zone, so you can take it. You can also use 0.7. The market can retrace to 0.7. Doesn't matter, you can take it as well. But it is always perfect when it is around the golden zone, and then it's also aligned with this resistance, this support turning resistance. Then you can take your entry and ride your trend. Yeah. But the second part of this whole thing is second part is another indicator. I have an indicator that you can that can also be used. Let me clean this part first. Okay, so let's just move to the second part of the whole situation. The second part, first of all, before I move to the second part, let me show you how that retracement of a thing works. The Fibonacci and all those kind of things work. Now, if you look at this, let's say the market is here, is going up, right? This is a trend. Okay, this is actually a trend. You can see we have, for me, just a minute, you have higher high, higher low, higher high, higher low, higher high, higher low. But here the market fails to make another higher high and make a lower high, then lower low. Yeah. So now the thing is this. So from here, let's say you've missed this point. Now, before you enter the market, you have to wait for the market to retraces. So if that case, if you are waiting for the market to retraces down to this part, all you just have to do is just to take your Fibonacci retracement tool, and then from this point, from this low here, drag it to the upper part here and see. Okay, you can see where the market is. And at the same time, if you look at it very well, at the same time, it is okay, at the same time, you will discover that it's using this resistance as a support. Resistance as what? As a support. Look at it. Beautiful. See? So this is what you should look out for. This is a resistance. Now it has used it as a support, and then it is at our golden zone. Here you can enter your trade and then ride it up. So another, if you look at this one too, that is here. Okay, let me remove this. So if you look at this one that is here, look at this one, you will discover that it's making this is support. This is some kind of resistance here, 1 2 resistance. Now it's using it as a support. You wait for it to retraces. Okay, let me move this up a little. Okay, don't forget it's always a zone. It's not a power, it's not a tiny line, it's always a zone. Okay, it's an area. Yeah. So now check and use your Fibonacci tool to see the retracement. To start from here and drag it up here. You can see it is at that point. So from this point, you can take your trade and then ride it along. Okay, so enough of that. Now, let me remove this. Now, another thing I want to point out is that for those of you that have been following my channel, that have been watching my videos, you will discover that I talk about price action that shows reversal. At this point, we discovered that the market was unable to make another higher high. If I'm to take, so for me, what I refer to as head and shoulder pattern, this is another, this one, the first shoulder, this is the head, this is another shoulder. So, and then you see the market breaks here. So at that point, the market run down. So if you are to enter this trade, wait for retracement. So let's check our use our Fibonacci. Start from the up here and then to this part. What do you see? Discover that it retraces to this golden zone, and if you look at it, you discover that it makes this point as a support, as this point which is it makes this point, which is a support, as a resistance. Look at it. Sorry. So look at the whole thing. Yeah, let me adjust it so you can see very well. Yeah. Boom. So you can see this is one touch, two touch, three touch, then it comes, traces, touch it, move down, come back again, touch it, and then move down again. So this is what you should be looking out for. This is the first uh, strategy. This is the first indicator that I will advise you to use when you are taking a trend. This is for downward trend. Okay, so let's assume you are planning to take this next move now. Let's assume now that you are trying to take this next move. If I were you, I won't enter this trade now. If I'm going to use this strategy, I won't enter this trade. What I will do is that I'll wait for it to retrace this. First of all, I will put my Fibonacci. You can see where my Fibonacci is. Then I will take my support, as you can see. Now it's using this. You can see it's using these supports now. Use it and come back as resistance. And when it comes to this point, I will then short the market. So uh this is the first strategy or the first indicator.
Sorry, guys, I won't be talking about the remaining two other indicators now, but in my subsequent videos, I'll be talking about those two indicators. But for now, I will like to stop here. The reason is because the video is getting too long and I don't like talking too long. Basically, I will see you in the next video. Don't forget to subscribe and like the video. If you subscribe, you'll be able to see the other two indicators and how to use them perfectly to become good trader. So subscribe to the video and I will see you around. Bye.